Good morning to all of our subscribers. The FutureTrend channel is glad to see all of you today, this morning, 23rd May 2018, and as usually, we start our analysis of major currencies. And we'd like to say that this morning, just before the European session opening, the market is a little under pressure of, as it seems to us, political developments in Italy. As you can see, the euro at the moment is really under the selling pressure. We see that euro dollar is moving back from the highs reached during previous trading day. It was the highs above 118.25. Now the pair is around 117.65, but also we see the same on other euro crosses. For example, euro yen is below 130, euro Swiss is below very important level of 117, the level of longer term uptrend line. Anyway, let's see the situation and start to analyze it from one pair to another. Let's start from the euro dollar currency. At the moment, the euro dollar, and it's not a surprise, is in clear downtrend that started in the middle of April. And while below the short-term downtrend located around 118.40 at the moment, the pair should continue to look weak and should be used as to sell on any kind of rally. Closing above 118.40 should provoke some kind of acceleration to the upside, but to say the truth, to really change the sentiment to the better side, the euro dollar should break above the highs of previous trading week around 119.95, as well as psychologically important level of 120, and here also lies moving average 200 daily line at 120.90, and to say the truth, the pair should break above that line to improve its near-term upside potential, let's say so. But till now the situation still remains quite negative for the euro dollar, with next level to see to the downside located around longer term uptrend line that's located at 115.70, and also not far from here lies the lows of November 2017 around 115.54. Our strategy regarding the euro dollar at the moment is to sell on a possible uptick, on a possible move closer to psychological important level of 120, but at the same time we will try to buy a possible undershooting of a level of 115.80 with a stop below the lows of November 2017 around 115.50. Dollar yen. And here the situation is also interesting because of rising recession situation, because of much lower euro yen. We suggest that especially this kind of currency like euro yen affected at the moment the dollar yen. That's why the dollar yen is back from the highs of previous trading day, the highs of 111.40 or even 111.41 was a high, and 40, 139.5. And at the moment the pay is below 110.50 and approaching really rather fast. It's uptrend line, current uptrend line located around 110.20. Let's say the truth, also here lies moving average 200 daily line. Let's see that. It's at the moment at 110.19. That means that on a possible break below this line and closing below psychological level of 110, the pair should be back under the downside pressure despite of the current strong dollar environment. So we suggest that from a point of view of short-term trading, it's probably worth to sell the currency on a possible break below 110 for more, let's say, for more safer traders, for more kind of clever guys. We advise to sell closer to a longer term downtrend line located around 112 with a stop above it at 112.30. Sterling. Yesterday it was inflation report hearings between MPC policymakers of Bank of England, but we see that the weakness of the United States dollar took the cable to the highs of previous trading session at around 134.90. Anyway, the cable is back under the pressure, under the downside pressure. Today is a day of publication, let's see, the day of publication of Consumer Price Index, and it will be extremely important for the nearest future of the British currency, how how UK inflation will behave itself in the nearest future. Let's say it will be important because in case of better reading of the UK CPI numbers, the cable could receive a kind of upside stimulus, and vice versa. So we prefer to wait for the final release of the data before taking any kind of decision. The dollar Swiss right now are under the pressure, but not because of a weaker United States currency. Let's say the truth, now the Swiss is back under the buying pressure, under the upside pressure because of rising political instability in Italy. And from that point of view, not just dollar Swiss, it's interesting to see and to analyze, because here we see that the pair is under the pressure, downside pressure right now. Of course, a lot will depend on today's Federal Open Market Committee meetings, meeting minutes of the last meeting, but it will be also very interesting how the dollar Swiss will evolve in the coming hours and sessions, because from one point of view we see a stronger selling interest approaching the level of recent highs around 10050. But at the same time now the pair is under the pressure, and probably in that case could reach the level of 0.9810, where lies current bull trend in the currency. Only a clear closing below that level could put the dollar Swiss under additional downside pressure. Let's see now, because today we will come just with one report. Let's see also the situation with the Euro Swiss. As we told some earlier, the pair broke below its longer term uptrend line. Let's draw this kind of uptrend line that's located. Let's see. Let's do next. More or less that was located around 117, but right now, first of all, we are below that level. We are trading around 116.75, and we are approaching rather fast the level of 116.48, where lies moving average 200 daily line. From a longer term point of view, clear closing below that level could put the Euro Swiss under additional selling pressure. That's why we closed our short trade, our long trade recommendation initiated on the testing of the longer term uptrend line located around 117. We closed our long recommendation at 116.70 and now prefer to stand aside. Also, by the way, the same applies for the euro, also under the pressure right now, around 129.94. And we are, as you can see, first of all, below moving average 200 daily line located at 132.39, as well as we are below 2018 downtrend located around 32. That's why we changed a little bit our strategy regarding the euro yen, and now prefer to sell a possible rally to 132 with a stop above moving average 200 daily line, because we suggest that possible negative developments in Italy regarding political deadlock, regarding possible formation of the anti-European Union government. Of course, it will put additional pressure on the euro, downside pressure, and in that case probably we could breach below the lows of this year around 128.95, and in that case it will for sure open the lows of August 2017 located at 127.56 at first, initially, let's say the truth. That's our strategy regarding the majors. Here you can see our strategy regarding the euro crosses. All eyes today on the Federal Open Market Committee minutes, and the same applies for the commodity currencies. Here you are our strategy regarding commodity block of currencies. We thank you very much for all of your attention and suggestion. Thank you very much. See you tomorrow with another release of analysis from the part of FutureTrend channel.